Joining us now to discuss the crypto markets is Forex.com Global Head of Research, Matt Weller. Welcome, Matt.
Hey, great to be here. Thanks.
Glad to see you again. So Bitcoin fell 3%. We saw about almost $500 million in sell orders coming out of Binance on Wednesday. And that seemed to have brought the price of Bitcoin down below $30,000. What do you think led to that? Why do you think there was the sell order? I mean, it's speculation, obviously.
Yeah, it's hard to say precisely, but I think one way or another, the hot UK CPI report that we got in today's European session certainly made the market more vulnerable and may have been the piece of macroeconomic data that may have pushed that large seller to sort of pull the trigger, which led to a cascade of sell orders as we dropped below 30,000.
I mean, I got to push back here because last I checked, most people are pricing their Bitcoin in US dollars. And the idea that the UK, which is a relatively small economy in the world, might have some inflation to deal with when it's an isolated currency compared to the rest of Europe and the United States, et cetera. Why does crypto care about that? There's got to be some other reason, correct?
For me, it all comes back to the macroeconomic environment. And I think the UK, to your point, it's not exclusive to what's happening in the UK, but I think it speaks to a broader theme that we've seen. And that's that while inflation is coming down, the rate of disinflation appears to be slowing. So essentially, the market is fearing, certainly from the Bank of England, but also from the Fed, that we might have higher interest rates for longer. And that hurts the liquidity environment, which has been kind of a big theme that pushed Bitcoin above 30,000 in the first place. The idea that we might have this global coordinated central bank pivot to easier policy by the end of the year. And that's just one data point that suggests perhaps that's less likely.
Wow, BOE matters all of a sudden.
Sure.
So, what else? We also, of course, we've seen Bitcoin had one of its strongest quarters in a long time. I mean, are we at the peak here? I mean, looking at least for the next couple of quarters, are we 30,000? Is this about settled, or I mean, what do you think would be a catalyst either way?
Yeah, certainly we've seen a massive run up. In the first quarter of the year, Bitcoin rose 70%. That is the biggest quarterly gain we've seen for the crypto asset in about 2 years. We saw about 100% rally back in the good old days of Q1 2021. But I think we are entering sort of a strong period over a period of time. So a secular bullish market. We're again on the upswing of the longer term cycle. And I do think we've seen the bottom back last year. So just looking at some of the broader trends and themes that drive crypto assets, we're entering a historically strong period in the 4-year halving cycle. That suggests to me that the bottom's likely behind us. And notably, the long-term holders, I've heard these individuals called Rick Astleys because they're never going to give up their Bitcoin. But essentially, they're reaching a peak of the supply. They hold about 83% of the total supply of Bitcoin. And as we've seen, some of these people have held through the collapse of Mt. Gox and 90% drawdowns over the years. So to me, that effectively just is supply coming off of the market. And I think that if there's any modicum of demand is something that should support Bitcoin prices moving forward.
Together forever.
All right.
Exactly.
Never to fall.
Yeah, Matt, if I could jump in right now, given that you're the global head of research at Forex, and we've also seen that this current situation has seen Ether, Matic, and Doge falling 5.3% in the past 24 hours. Solana, it lost nearly 9%. What would you be researching at this time? What would you be asking your team to research at this time? Like, what do you want to know?
Well, for me, when it comes to crypto assets, I always like to go back to the supply and demand picture. Certainly with Ethereum post the merge, the supply and demand picture is, or at least the supply side, is relatively encouraging. We've seen a net decrease in the supply of Ether, and that's very likely to continue for the foreseeable future. So I think the tokenomics, if you will, is something that we always go back to in these times of turmoil. And I think those are more favorable for Ethereum as well for Bitcoin, very low inflation rate. And I think we compare that to some of those other proof of stake tokens you mentioned, and it's just not as compelling of an environment. Here you can see, pulled up the quick chart here. After the Shapella upgrade, we now see Ethereum stakers can remove their staked Ethereum for the first time in years. Some of these people have been staking staking for 900 plus days. And that was expected to be a bearish catalyst. Instead, the market digested it very easily. And in fact, we now see a net increase in staking in Ethereum. So the entire protocol has essentially been de-risked by the fact that stakers can stake and unstake relatively easily now. And if we look at that compared to some of the other proof of stake networks, Ethereum has about 15% of its supply staked, whereas things like Cardano, Solana, those are up closer to 80%. So this is another situation where if investors feel more comfortable staking Ethereum, that again could take more supply off the market and be a bullish catalyst for the world's second largest cryptocurrency as well.